The sound.
The sound of Cov.
CWR Breakfast with Phil Upton.
BBC CWR.
7:17. If you've got a mortgage, you'll be very well aware of interest rates. For so long, almost a decade, interest rates have been on, less than 1%, 0.5%. In fact, at one point, interest rates were 0.1%. Okay, not anymore. 6 months of 0.25% rises. Now means your interest rate is at 1.25%. And today, the Bank of England is expected to announce an even bigger rise in its latest monthly forecast at midday today. Speculation, in fact, we could see the biggest one-off increase in over 25 years with a 0.5% rise. That would take the current interest rate of 1.25%, still, historically very low, to 1.75%. But the Bank of England have signalled that these rises could continue throughout the rest of this year. So why are they doing this now? And what would that mean for you? What could be the effects of this for you? As your mortgage, your pension, your savings? BBC CWR's James Aldridge been having a look.
There's no denying it. The cost of living crisis is affecting everyone. The prices of petrol, energy, food and so much more are soaring at rates we haven't seen in decades. That's why the Bank of England look like they're about to raise interest rates. Now these tell you the cost of borrowing and the rewards for saving. If they're high, it's expensive for you to borrow, and if they're low, it's a little bit cheaper. The bank thinks that if it makes it more expensive for you to lend cash, you'll be less likely to spend it, meaning the demand for goods and services will fall and inflation will stop doing a Sherika Jackson at the Commonwealth Games and slow down. However, some economists aren't convinced this is the way we should be going. Higher interest rates tend to cause slower economic growth, as we're less likely to splash the cash while we're out and about in Broadgate. They're also likely to increase the cost of the government's interest payments, something that could lead to higher taxes in the future.
So, how's this going to affect you? And certainly if you've got a mortgage, savings, could you be affected by this? Paul Barnes is coordinator and co-director of the Loveitts estate agents in Coventry. Paul, good morning to you.
Morning.
And Malcolm Davidson, known as the Coventry Moneyman. Morning, Malcolm.
Morning, how are you?
Thanks. I'm good. Thanks very much indeed. Malcolm, I'm going to start with you because a 0.5%, a one-off increase of 0.5%, how much could that hit consumers, do we think?
Well, it depends on how much you owe, and it also depends on how many years you've got remaining on your mortgage, but it could be anything up to about £50 a month. So all consumers need, on the back of all the rises in energy prices and the rises in prices of everything else we've seen over these past few months. So not great news.
And why did the Bank of England, Malcolm, feel as though they need to do this now? What does raising interest rates do to the wider economy?
Well, it's a lot to do with businesses, really, and trying to discourage businesses from borrowing money to cool the economy down. It's not like the government, this. Remember, they devolved the control of interest rates to the Bank of England back in 1997. So there's no political thing behind it. They've got to keep an eye on inflation. They were very slow to react to this, I feel, last year. They've got this inflation target of about 3%, and we're running at 3 times that at the moment. So I think the Bank of England got a bit confused in terms of what was going on last year. They thought perhaps the increase in GDP was to do with pent-up demand off the back of COVID. So we've been behind the curve here, definitely behind the states who have put rates at 1.5% in the last 2 months. So unfortunately, the knock-on effect for us as consumers is the prices of our mortgages, which is our biggest household item, are going to be going up and probably going up for the remainder of the year.
Okay, let's put that then to Paul Barnes from Loveitts Estate Agents in Coventry. Paul, this is going to have an impact then on the housing market, yes?
That's what people say generally, yeah. We're still seeing, a lot of activity at the moment. There's still a demand for properties when they're coming on the market for sale. But yes, I think when we come into the winter months, we're in a bit of a sort of a summer drought, as they're now reporting it. And I think generally everybody's got their bills, their heating off, using less electricity. I think when it comes into the winter months and you really start to see a change in the weather, change in the mood, dark nights, I think that may well certainly have an impact, yes.
And what about the rental market, Paul? I mean, are we able to sort of look at this from both the landlord and tenant's perspective as well, and how the 0.5% rise could affect that?
Well, first initial reaction from landlords is they're going to want to increase the rents, which is generally happening at the moment. So from a landlord's perspective, yes, they're going to want to cover those mortgage payments with increasing rents, and certainly, again, because of the lack of movement, I think people are sort of to a point down in tools at the moment. They're not looking to move necessarily if they have to. What's then happening is there's less stock available. In turn, tenants, again, are going to have the worries of paying for rent. Obviously not affected by the interest rates in terms of mortgage payments, but again, cost of living with bills going up, this is having a massive effect for tenants. And I think a lot more people are mindful of how, in the winter months are going to be paying for bills, petrol costs, everything you just mentioned, Phil. You imagine, I mean, I don't know, Paul, you'll have a much better idea on this than me, but, we've seen quite a bit of fluidity in the housing market, hasn't it? Certainly, out there isn't enough stock, is there? You put a house up for sale, and you'll have multiple offers at the moment, and houses will be sold like that, won't they? I mean, do you see that drying up? Do you see the housing market slowing down because of these moves by the Bank of England? Certainly from what we're seeing at the moment, we've put a few properties on the market only this week, and as you say, we've got multiple viewings on the properties. Demand is great. There's still a lot of investors looking to spend the money, so they're not being put off by this potential news. To be honest with you, at the moment, I can't see that changing. Stock and demand, there needs to be sort of a balance and equilibrium in terms of making sure that there's enough stock coming onto the market to meet the demands of people out there looking to upsize, or move into the city. So it's interesting times. We're quite positive, but I think as Malcolm said as well, with the next few months and with more interest rates, rises of which they're predicting, I think it's going to be a very interesting time for people.
Malcolm, just come back to you. I mean, Paul mentioning there there'll be, he thinks there'll be more interest rate rises. You said there in America they went much harder, much faster. Would you be almost suggesting actually, never mind a 0.5% rise, maybe they should have a 0.75% rise when they announce this today and send interest rates up to 2%?
Well, things have changed, though, haven't they, from then? I do think we were slow off the mark, but the energy crisis has exacerbated the situation. So personally, I wouldn't want to see consumers life get any more difficult for consumers than they already are. But the Bank of England won't be having that in their mind. That's not their job. That's not their remit. Their job is to keep inflation under control. They have one blunt tool to do this, and that's interest rates, so they won't blink to take further action. I don't think it will put first-time buyers off because rents are going up as well. What's going to happen, though, I think, towards the end of the year is it could have an effect on supply. It's already pretty bad. But if you're thinking of moving up the property ladder, you're always in two minds whether to move or not. So you'll be now not only factoring in moving to a bigger house and having a bigger mortgage, but that bigger mortgage will have a higher interest rate applied to it, and those bills will be higher due to the rise in the energy cap. So we may have a job, or the estate agents at least may have a job persuading people to test the market and have a go at selling, because they'll be concerned at these increased costs.
Gentlemen, got to leave it there. Good insight, though, and some context for us there on the announcements we're expected to hear later on today. Malcolm Davidson, Coventry Moneyman, Paul Barnes, co-director at Loveitts Estate Agents in Coventry.